Welcome to 𝐿_GROW.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on 𝐿_GROW.com.
Hello, folks. Bill and Brian here with Energy Row. And Brian, we have seen it all.
Have we? We have seen it all?
I keep thinking we've seen it all, but every now and then people surprising me.
But Nuke was still confused.
Yes, exactly. So where we go today, we're going to talk about what the power of data in energy trading means. Now, what does that mean? What kind of power is that, Brian?
So,
how come you spend 8 years in MIT to become a cable repairman?
Yeah. So, listen, one question that we get an awful lot is what data is important? We're surrounded by a lot of data. I'd probably say 10 to 20 years ago, getting the data was difficult. Now it's what to do with it and how to interpret it. And so the power of data in energy trading comes from a lot of key sources. So we're going to step through kind of a tutorial on what that power of data is and what data is important in our subjective opinion. There are going to be other subjective opinions, and we welcome your comments along the way. So which energy markets are we going to talk about? We're primarily going to talk about crude oil and natural gas, but we do talk frequently among our members on ultra low sulfur diesel and 𝐅𝐵𝐷. And I always say 𝐅𝐵𝐷 because how do you say that how do you say the words there, Bill? What
Oh,
is
no,
that?
you're talking about MTBE? Yeah, no, I can't say that.
No, the 𝐅𝐵𝐷, reformulated blend stock for oxygenate.
Yes, blend oxygenated stock. That's what it's.
Yeah, oxygenate. So
Actually, it's a nice. There you go.
So I'm just going to stick with 𝐅𝐵𝐷, but these are the primary markets that we typically look at, and they're all interconnected. For the simplicity of this live stream, we're going to keep it really restricted around crude oil, natural gas, and bear in mind we are only scratching the surface of everything that needs to be evaluated to really have a firm understanding of the energy markets. So, who are these guys? Who are these guys? Who are these guys?
Yeah, I know those guys.
Who are those guys? So my name is Brian. This is my business partner, Bill, and we established a company. And after years of struggling to try and understand the energy markets, we finally saw the matrix and realized this shouldn't be just for the big guys. More about us later, but we created a service that levels the field in energy markets with Rogue Edge, which gives you access to 150 interactive charts, daily emails, weekly videos that really dissects the market in so many different ways. Rogue Premium, for those that want a curated content, peer-to-peer networking, custom insights once a month. And we do have Rogue Advantage, a bespoke advisory services. So we have 3 tiers: Rogue Edge, $89 a month; Rogue Premium, $179, and Rogue Advantage, which is custom and built around your motivations. So when we look at the pricing of the market and what data is important in energy markets, well, you first have to define, are we talking about physical markets? Are we talking about financial markets? And then in physical markets, where is important, but also when. And financial markets, those are the where is predefined, but the when is not. Right, Bill?
Well, yes, and financial markets, when you're talking about either the commodity or the basis as well. We're not going to go into basis today, but the basis is the where in the financial markets. That is actually an over the counter type transaction as opposed to an exchange transaction. You don't see much basis on the exchange.
Yep, and I think I got that right here. So these
Yeah, you
are these are prompt month, and I just took these from the other day, where you have different physical trading points inside the United States, and the way that these are organized is if you have CIG at minus 67, you take the NYMEX futures price minus 67 cents. That gives you the theoretical value of CIG, which is located in the Rockies. So for
which is just a market point. That is not a net back to the well. That is
Yep,
just a market point on there. There are additional
yep,
expenses if you figure out what your cash price is.
right. So on the financial markets, you're going to look at multiple exchanges because these are predefined for CME or NYMEX. That's another iteration. CME and NYMEX used to be two separate entities and they merged. But NYMEX is where most of the financial commodity is traded in the United States. You've got New York Stock Exchange and NASDAQ, which are for various ETFs and equity products. And there's various tools and websites such as Bar Chart, TradingView, and Energy Rogue. So as we discussed
In
before,
this, Brian, I think it's important to note that while we're talking about the U.S. here, crude oil trades also on the Hong Kong market and on the London exchange. And so
right,
after crude oil is traded 24 hours a day.
yep,
And so what we're focused on markets. And so that's why sometimes you get order filled overnight and you're going, well, the market wasn't open. Well, it was either an over the counter or it was done on a foreign exchange.
there's
Because all the big trading
electronic
shops
trading that are open, right?
and all the big shops, all the big guys have representation on those two exchanges.
Yep. And we'll step into a little bit about our tools, which we often look at, which are fueled by the energy markets, fueled by the CME or NYMEX data. There's also other sources where you could get the CFTC Commitment of Traders report, which tells you how much length or short the markets are for managed money, swap dealers, commercials. Um, but when you get into futures, you get into identifying individual contracts. So right now, many people refer to the crude oil price as what it's trading at today. This is yesterday's close at 81.41. So when somebody says crude oil is 81.41, well, that's applicable for August. That's not applicable for December, which is trading at 78.25. So
Right.
when is super important when you are getting to financial markets,
A lot of
especially on the
times you'll
futures
hear
contracts.
a lot of times you hear people talk about it. They traded a strip price. Well, the strip price is not a price. It is usually some sort of average, depending on what group you're talking to, of the next 12 contracts. If it's an annual
Yes.
strip.
For instance, this right here at 75.23 for 2025, that is the average. And if you look at the individual contracts, you will see we start the year at 77.65, exit the year at 73. So the average is somewhere in between. So
So every one of those products is actually made up from separate contracts that are a monthly contract with a minimum contract of 1,000 barrels, if I remember right.
yes, yes. Unless you're on the E-mini, which are new products that were launched, and there's even a micro. There's a micro that I think is I think the E-mini is 500 and the micro is 100. If I'm wrong out there and you're listening in, drop me a comment and let me know that we're off. So physical markets, as we said, where and when matter. And then when we get into crude oil, what data is important? Well, in the United States, the EIA Weekly Petroleum Status Report, which I'm going to pull that up right now, crude oil or petroleum status report is right here. This is a very important report that comes out. And when we look at the balance sheet, there's a lot of data in here, and how to digest this takes a lot of time. We're not going to cover all that today. However, this report covers so many particular aspects about the physical market when you come to supply, when you come to stocks, production, refinery inputs. There's a lot of information that is packed in there every single week. And this is released every Wednesday. And then in addition to that, you have the, for the United States, the Federal Reserve Beige Book. This gives you a narrative around financial markets, which could be an indicator on the health or lack thereof of the financial markets, which can spill over into the crude oil price. Internationally, looking at the OPEC monthly market report is a very, very important topic. And I was just going to see, because I think we just got, I'm downloading it right now. OPEC just released their market report. So we're going to open that up and take a look at that live. Next week, we'll probably dissect that, because this report is massive. It's usually between 80 to 120 pages of data, and this data covers so many different aspects of the market. So let me pull this up right now. And now we're going to cover the EIA Petroleum Status Report. We'll come back to OPEC. This is going to cover stocks and change in stocks for crude oil, SPR, motor gasoline, fuel ethanol, kerosene jet, distillate, residual fuel oil, and propane. I'm not going to say this. Oh, go ahead.
For people not familiar with that, a lot of people don't know when we say stocks, what that means is inventory. That's how much is in storage.
Right.
So just trying to help with the vocabulary a little bit there.
Yes.
So if you're new to vocabulary, stocks is talking about inventory.
So stocks is inventory, and essentially, if you look at supply and demand, if you have more supply than refiner inputs, then you are going to have a stock build or an increase in the stocks. And let's actually take a look at
The crude oil is called stocks, but in gas we call it storage.
Yeah, which I always get confused by that. I think petroleum should call it storage too. But when we look at the petroleum report, and this is for the week ending 7/5, so this actually just came out as well. So today is a very important one, and you can see that on the commercial side, for the current week, we had 445 million barrels excluding SPR, and last week we had 448. So that means that they withdrew or had a draw of a certain number of barrels. And SPR actually added 1 million barrels. Let's see, refining.
I think it's 500,000.
Yes, you're right. It's 500,000.
And I think that's a leftover contract. I don't think it's actually a new contract. I think
conventional
they
had a build. And we had a draw. So we had a draw here, a build here, flat there, build, draw, same, a build on kerosene jet. Distillate was a build. This is the time of year that it should be drawing across all these products. So the thing is
Oh,
that
the reformulated is probably for winter.
Oh, is it?
Yeah, I think so.
Okay.
Seeing much activity there.
So, so anyhow, looking at the stocks, you're going to look at the stocks and the change for crude oil, motor gasoline, fuel, ethanol, kerosene, jet, distillate, residual fuel oil, propane. You also in that report get an insight into production, imports, exports, refinery inputs, products supplied. This is both sides of the refinery. So with us being on the crude oil side of the equation, it's important to look at the supply side, which is the crude side, upstream of the refinery, and then the refined product side, because that puts the whole piece together. So what we do in our platform is we provide kind of a balance of the market. For instance, this shows that we actually, when we look at refining inputs and crude oil exports, that is actually greater than the volume of supply. So for this particular week, we are seeing that we actually have more demand, so we had a draw. And we also track production, and we put all of this into interactive charts so that people could not just stare at a number and have to go through and say, well, commercial, let's see, there was a draw because it was 448. So what is that? 3. We have on our platform, is we put all this data into interactive downloadable charts so that you could actually identify trends in the marketplace. For instance, many people were projecting that this year we would have a rapid increase in the volume of supply. We actually saw counter trends to that and said, at best, we're going to stay flat. And we have. We're at 13.2 million barrels a day. And so tracking this supply is important, tracking total production, and then every single
Go back that one
aspect.
slide there, Brian. Let's go back that.
One?
No, not that one. To one up to Energy Rogue slide. Yeah.
This one?
The other thing we do is we put it in historical perspective. And that's something that you don't get off a report like that. So you're seeing here what is the 5-year maximum, 5-year minimum. So we're giving some historic perspective. And while we're looking at this, you can see that our production is at the very top of the 5-year average. In fact, because it's setting new highs for the 5-year average. So that gives you some historical perspective of how to look at this information.
Well, and part of the reason that we put this into interactive charts is so that you could identify trends. For instance, if you wanted to take a look at what happened from COVID, you can go back in time and say, well, in March, then we just fell off on production because many people were shutting in at that time. So this is the reason that we actually established Energy Rogue and put everything into interactive downloadable charts, is so that you could identify trends. For instance, one thing is 10 years ago, we were half our current production. So it's taken us 10 years to actually get to the level that we are. And then we actually track things like OPEC, rig count, oil, and oil rigs and oil supply, and what else do we got here? Oil production. We actually track declines so that you can actually start to see how much we are declining, how much new production is being brought on by basin. So we do this so that we can find trends in the marketplace, because that is super important, and that helps you prognosticate what might be coming down the way. For instance, I'll go ahead and do this right here. How much new production are we getting out of the Permian? Let's look at the trend. So we had a dip from 2022. We are now increasing, and a lot of this is due to a natural gas pipeline that allowed for new production to come online. So they weren't allowed to flare as much as they were flaring, so they allowed that. I expect this to kind of fall off. And let's look at the decline.
And by the way,
And
decline is a conversation you don't hear much anywhere. So what we're trying to say is that you got to, the reason data is important is because you can't do your planning off of what I refer to as headline fundamentals. In other words, whatever the headline is what you're doing everything off of, because most headlines are wrong. And when you have the data behind you, you're really looking at what's happening. And that's what we try to do, is provide you not just a easy look at it, but also an affordable look at it, to be able to make that data and make decisions based on data instead of headlines.
right. For instance, you could look at this chart right here from 2022 and just say, well, we are on a clear uptrend here. But what we take a look at is we identify this as kind of a stabilization, and it has to do with the volume of declines that the Permian is encountering. Let's just look at it real quick. So currently the Permian is declining by 424,000 barrels a day every single month, meaning we need to bring on new production in excess of 425,000 barrels a day. Now, in April, we did. We brought on 435,000. So what that tells you is the Permian grew by 10,000 barrels a day. Now, think about that. There was 435,000 barrels of new production that was brought online so that we could add 10,000 barrels. So that is a lot of momentum, meaning if you look at that, you need to track the rigs to get a leading indicator of what production might be happening in the future. So anything on that point before I move on?
I just think it's important, looking at that net change that you've got right down there. You can see that while when you look at production, it looks like we're growing like crazy, but if you look at our change, you can see that we're actually shrinking what we were doing just a year ago.
Yeah. So all of this data is super important. And when you look at the Fed Beige Book, each financial quarter, let's actually bring it up, and they have a narrative for each area of the country: San Francisco, Dallas, Kansas City, Minneapolis, St. Louis, Chicago, Atlanta, Richmond, Cleveland, Philadelphia, New York, Boston. So they look at labor markets, the overall activity, the economic conditions on employment, consumer spending, manufacturing activity, real estate markets, and they also look at regional insights with business investment, consumer spending, inflation, and trade and exports.
Yep.
All of this gives you indications on the overall health of the economy. So,
And why is it, Brian?
what's that?
Why is that important? Good economy equals demand.
Yes. If you have soft demand, you will have this dynamic that we just identified back in COVID times. So when COVID hit, demand fell off, so did production. So the economic activity squandered, or not squandered, but really hurt demand. And let's go ahead and look at the refinery inputs during that time as well. So you can see, let me clear this up. You can see that in 2020, we were refining roughly 16 million barrels a day, and we declined to 12 or 13. So that was a massive demand hit. And that's the reason that the economic indicators are going to be leading indicators of where the economy might go, which then shows whether or not we're going to have growth or decline in demand. So now on the OPEC side, their monthly market report this month is 93 pages. And they discuss things like price movements, world economy, world demand, world supply, product markets, refining operations, tanker markets. This is a new one. This is really important because of the change in the shipping routes due to Israel Hamas. So you have the crude and refined product trade, commercial stock movements, balance of supply and demand, and they cover monetary policy. They cover, here's just the table of contents: crude oil price movements, the commodity markets as a whole, OECD, non-OECD, the demand, the supply, they break it down, refining margins, they track that. And we often look at this for insight into this, but we also incorporate that into our supply portfolio because it's not just about the United States. Because when we look at the United States, we are currently exporting, we're exporting 4.4 million barrels a day to international markets. We're importing 6.5. And if you want to find out why, just leave us a comment down below and we'll explain that to you. Because it's a longer, it's a longer, it's a longer discussion, but we'll be happy to get back to you. So in OPEC, they talk about the crude oil price movements, the world economy, world demand, supply, product markets, refining operations, tanker markets, crude and refined product trade, commercial stock movements, the balance of supply and demand. Now, we put all this into our interactive charts so that we can identify particular countries and their production profile inside of OPEC. For instance, many people have been talking about why have people been talking about Iran, Bill?
Iran has been one that was been under and has continued under sanctions even to this day. But while they're under sanctions, if you'll take a look, their production has increased. So that oil is going into what do they call that? It's not the black market. It's the
shadow.
It's like the shadow market, exactly.
So
And it was shadow tankers.
This is due to economic sanctions, and then they
Right.
started building back. And what's interesting is everybody talks about Iran in terms of new supply. Well, the fact is they've almost recovered almost all their production. And let's actually take a look and see. They're currently at 3.2, and their max before sanctions was 3.8. So they've effectively been able to bring back on all of their production. But looking at the supply side and the demand side globally is important, and by country, so that you can define narratives. So that's super important. So anything more on OPEC before we move on, Bill?
No, I think it's just important to understand that you also have to look at making sure that they might just be talking their book a little bit. So I always give it a little bit of a grain of salt when I'm looking at the OPEC numbers.
Yeah. Well, and you can definitely see how much Saudi Arabia really contributes to this portfolio. And really, I'd say that if you look at it, every country deserves a look, because 500,000 barrels a day moves the market. So the reason that there are geopolitical risk premiums is because there's concern because it's close by to a lot of production and a lot of shipping lanes. So
Right.
So now, what do we cover on natural gas? In the United States, two key things to look at are EIA Natural Gas Weekly Update, the EIA Weekly Storage Report, international, Mexico exports, Canadian imports, LNG exports. Because when we look at Let me change this over to natural gas. When we look at the supply and demand portfolio, the supply currently is about 109.8 BCF. That does include Canadian imports. We'll get into that a little bit later. But on the demand side, you can look at power, other demand, industrial, and all of this matters when you're taking a look at the market so that you can identify trends. For instance, one thing that I look at with Canada is we have effectively stayed in a range of 4, I'd probably say it to 6, 4 to 6. So 4 to 6 BCF a day of imports from Canada. This is going to change once Kitimat LNG comes into play. So a lot of people are expecting some big changes, and I am definitely one of them. The other thing that
That's in the second quarter of 25, isn't it?
I think so, yes. So 2025 is going to be an interesting year because there's LNG added exports along with Canadian, along with Mexico. So we
Right.
have the potential of LNG being a crowded market. And this is part of the reason that you can't just look at the United States. But when we look at production, since December, we went from 105.8 to below 100. We've creeped back above 100, but this is a big drop percentage wise. I mean, inside of 6 months. So
And most of that was
105.8
based on
to
price.
100. Yeah. Yeah. So when you move 5 to 6% over the course of that time frame, it is going to move markets. So when we evaluate the natural gas weekly update, the storage report, the exports, we look at the supply, we look at the demand, and then we identify trends along with the supply and demand. And I'm going to show you something on the electric side that I like looking at. And that is since 2019, you can see that we are continually setting new, well, not so much relative to last year, not yet at least. We are setting higher highs and higher lows when it comes to our electricity consumption. So that means that on the whole, electric demand is growing. So now let's take a look at Mexico exports. And we can see a continued path where we are growing. Not significant, well, percentage-wise, significantly. So we're at 4.5 in December of 2018. We're now at 6.6 to 7 BCF a day on Mexico exports. And now the one that everybody watches is LNG. And you can see back from 2018 to today, it is a large share of our US demand. So when we look at 14 BCF a day or 13 BCF out of 100, that's a massive, massive number. So evaluating the gas storage is another one. Let's go ahead and take a look at that. This is interesting. So as Bill mentioned before, we put everything in a 5-year max, 5-year minimum. And what you can see is the blue line is the 5-year max. The yellow line is the 5-year minimum. If you're seeing this yellow portion, that means we were setting new 5-year highs at that point. And we are currently within 1 BCF. Storage report comes out tomorrow. 1 BCF of the 5-year maximum. But back in March, we were over 330 BCF over the 5-year max. That means when we equalize for this time of seasonality, we have depleted 330 BCF of our inventory on a seasonally adjusted pattern. So,
Well,
does that
I'm
make
looking
sense?
forward to next year when I think we finally get 2020 out of the mix, because I think that's
Oh yeah,
affecting the average.
yeah, yeah. That will affect the average. So
And the other
these
thing
are the
is we've been seeing demand grow by about a BCF a day total on that gas. And what that means is in the injection season or withdrawal season, that means that's 150 BCF that's got to come from somewhere. If you're not seeing it in production, it's got to come out of storage.
right. Well, and our storage inventory really hadn't grown in decades. So
Right.
evaluating weekly supply is important. Evaluating the key questions. What are the imports from Canada? What are the declines in new production? And on the demand side, what are the key questions there? Power demand, LNG exports, Mexico exports. So,
So it's power demand in the summer, heating demand in the winter.
yep. So where should you go from here? You should, if energy markets matter to you and your business or your trading, EIA Petroleum Status Update, OPEC Monthly Report, EIA Natural Gas Weekly, EIA Natural Gas Storage, and the Fed Beige Book. This is just the start. And it is honestly one of the reasons we spent hours and hours and hours every week, probably 15 plus hours, scouring over this so that we could understand the markets. And that is the reason that we created this platform so that with a few clicks of the button, you can actually understand and actually interpret what is happening with demand and what is happening with supply, what is happening with storage, so that you.
And by the way, that 15 hours was after we learned where to look. We spent more than that just trying to figure all that stuff out.
Yeah.
You really think you can fly that thing?
Exactly.
So anyway, we thank you for showing up, and we would love to see you inside our platform. It's $89 a month for Rogue Edge if you want access to the charts. If you want access to our Discord community where we talk about the markets every single day, that is $179 a month. Plus, Bill and I will meet with you personally once a month to evaluate your strategy and your needs and your goals. So then lastly, if you and your business is really challenged or struggling in the energy markets, whether you're on the consumption side or the producing side or the midstream side, give us a call, book an appointment. We'll see if we can help you, because we have economically optimized 10 to 50% of improvement for netbacks for producers, 10 to 50% of value added to consumers, and develop strategies to add seamlessly and risk-free 10 to 20% on the midstream side. So those those are our offerings. Would love to see inside. Bill, do you have any closing thoughts?
Just that when you're trying to evaluate the energy complex, it is complex, but it's not hard. You can do this. This is something you can do. And this is things that you should be making your business decisions on based on, not on the headlines or whatever you see on TV, because they do not analyze it very deeply.
Right. Right. And that's the one thing. You have full control over your destiny here, and you don't have to come and join us. We wanted to give you an indication on the areas that we look at and that we've automated so that we can develop those, so that we can skip over the data aggregation and actually get to analysis, because it's not just data, it's what you do with it, what it means, what it
Right.
is interpreted, right?
Right. Data is data is data. What we try to do is provide that and make it where you can take your data to information, information to strategy, strategy to action.
Yep. So listen, folks, thanks for tuning in. If you have any questions, drop them in the comments. Really appreciate you showing up. Hope you have a fantastic Wednesday, and we plan on seeing you next Wednesday. So thanks for joining us, and make sure
But Nuke was still confused.
don't be
Yeah.
confused. Take control, take action and accountability, and study the markets. Because if you're not studying and your business depends on the price of energy commodities, then you're doing yourself a disservice by not looking at it. So
And you might look around because your business might depend on energy more than you think.
yeah, very, very true. Very true. So listen, thanks so much, folks, and we will see you next week.
See you, folks.